All right, everybody, welcome back to another episode here on the Dividend Doggo Show on YouTube, where I am taking you along with my financial journey to hit my FIRE numbers and hopefully retire early. So we are looking for Fat Fire for anyone who is interested in that. What that means is that we have more than enough money to cover our monthly expenses and live life, take vacations, help out family and friends when needed, donate to charities, things like that. So that is currently my goal with the portfolio. I am in my 30s and I'm hoping to retire somewhere in the 50 to 52 range. So I've got quite a little bit of a horizon and run room to get this portfolio built up, but this portfolio is designed to bridge the gap between getting to access our 401k funds and retirement accounts for my wife and I. And that is likely going to be somewhere in the 7 to 10 year range. So ideally, what we want to do is build this portfolio up to the point where it is making somewhere around $80,000 in dividend income per year. That will allow us to cover all of our monthly expenses while we're kind of bridging that gap, including healthcare and food and all that stuff. So we're just going to continue pressing forward and putting money into the stock market and buying shares of companies to earn that dividend income and go forward. So, as you can see here, we have a market gain of just under $200,000. We have earned dividends of $44,500. This portfolio has been around since August 6th, 2019. We aggressively funded this portfolio with real estate money and holdings. We've been real estate investors for years. And in 2019, I did some cash out refinancing on real estate assets to fund this portfolio and start building it up. So let's go take a look here. Healthcare was, let's look at the weekly review here. So as you can see here, healthcare was up pretty significantly, about $1,400. Utilities was up about $4,500. That's mainly off the back of VST. Then we have consumer, which was down about $1,500. Let's go take a look at consumer here real quick. It looks like Altria was down a fair bit. Home Depot was down a little bit. Coca-Cola was up. Costco was up. Target was down just a little bit. Lowe's was down a little bit. And Pepsi was up. So overall, about, what is that, half and half, red to green. It's just the weighting is pretty heavy onto Altria here, so that definitely brought it down, so it wasn't quite even. But overall, not too worried about anything in there. I will be looking at Lowe's, Home Depot, all of those that are going down, Target, as being potential buys as they get into even better price ranges than I had been purchasing them over the past 6 months. So let's look at, we got finance. Overall, finance had a pretty red week here with JP Morgan and Bank of America being down pretty significantly. Bank of OZK was down a little bit. Hingham not down too much, but overall that particular pie was down 4% for the week. And then we have Coma Money. Coma Money tracks only two stocks. That is SCHD, the Dividend Equity ETF. That is just a solid fund that I will continue to invest in for the future, most likely. I thought about at one point maybe swapping this over to SPY to sell options calls on it, but that might be way down the future line once if I decide to move off M1 Finance, which is a possibility, just so that I can get access to more in-depth trading and options trading later on. And Berkshire Hathaway was down just a little bit this week, about 2%. So I am definitely still wanting to build that position up some more as well. That is one of the only non-paying dividend stocks that I own. They collect tons of dividends, and then they put it to work buying more companies. So it's pretty interesting. Tech ended the week green, basically off the back of Microsoft here, being up almost 2% for the week. Google was down just a little bit. You can see that we've gotten a little bit more into Google. I'll explain what happened there with that in just a moment here. And then industrials was down just under 2%. Raytheon being down 2%, Caterpillar down 1.6, and Lockheed Martin down 1.8. So overall, the portfolio monthly tracks mainly BST, which is the Science and Technology Trust. It was down just slightly. It owns a lot of shares of Apple, Google, and Microsoft, and then runs covered calls on those to give you monthly income. The owner's rewards pie was in the green this week. It's basically just the stocks that I hold for getting the owner's rewards. So let's take a look real quick at. I am still here. Don't log me out. So let's take a quick look at what the buys were for the week. You can see that we had some dividends roll in. We had VST come in, BST, Pepsi, Waste Management, Coca-Cola. These are have yet to be deployed. The Pepsi, Coca-Cola, and whatnot. Those will likely get dripped in. I'm going to try to even out my shares in those. But as you can see, we had a bunch of buy orders throughout the week. We did have a referral bonus, which we put into Google. Which is absolutely amazing. Everyone's still getting that $50 promotion. That is an awesome thing to take advantage of. So let's go through real quick. Let me make sure that I don't get logged out of any of these. Okay, so first big buy, Vistra dripped its dividend and a little bit extra. This allowed me to acquire about 47.86 shares at a buy price of $23.26. Now, I'll go into why I went ahead and dripped the dividend for Vistra in just a moment. Mainly, I was reading up on the Seeking Alpha published a really nice article about it and its cash flows. So I was going to take a glimpse at that in just a minute here. Now, Google, you saw that we got a $50 referral from M1 Finance. I went ahead and put that into buying fractional position in Google. I highly believe in Google's future. They're a dominant player in the tech space, and I want to own more shares. And doing that by you guys watching this channel and using the referral link, and that's just an amazing way for me to acquire more shares of Google. And I'm going to likely continue to buy unless something interesting comes up. I'm likely going to continue to build out a few shares at Google with the referral money, with the YouTube ad revenue income, and see how that kind of builds. I think it's an interesting thing to track and see how that money rolls in. Now, the next thing, SCHD paid its dividend. I rolled that right back into more shares of SCHD. This allowed me to acquire 5.65 shares of SCHD at a buy price just under $80. And I apologize if you can hear the dogs barking in the background. It's beautiful out today. I'm looking forward to getting outside and playing with the puppies. As most of you know, channel's name is Dividend Doggo. We have 3 puppies right now. The last buy for the week is Bank of America and Lockheed Martin. I do believe in both of these stocks. Bank of America isn't my favorite of the financials, but I do want to drip its dividend. The main reason being I wanted to get to an even number of shares in case in the future I do want to write covered calls on it. I would like at least a flat even by increment of 100 amount of shares in these stocks. So let's go back to VST. We bought an additional 47 shares, almost 48 shares of VST. Now, the reason that I did that was mainly off the back of this article, and I'm hoping that everything is cooperating. And yeah, okay. So mainly off the back of this article, I was reading this article and I was like, I wasn't sure if I wanted to reinvest the dividend, but it's got me hooked again. Every time I look at this stock, I keep thinking about the future, and keep thinking about what is going to earn a pretty solid return over the next few years. Now, for VST, the free cash flow is absolutely phenomenal for this company, and their plan that they put forward is what got me really into uh, buying shares of this stock. So overall, you can read through this really quickly if you'd like to. However, management basically pledged to return $7.5 billion to shareholders over the next 5 years. That is 80% of the current market cap weighting. It is a sub $10 billion market cap on this company. That is over the next 5 years. That is an absolutely amazing return through share buybacks and through dividend increases. This company is giving double-digit increases for the past 2 times that it's done dividend increases, and I believe that it will continue to do that going forward based upon the plan that they've put out. Now, they believe that it will potentially do a 50% total return over the next 18 months. Now, that is absolutely phenomenal for a less than 2 year time rate. 50% returns wild. Now, there are a lot of, in my opinion, there's a couple different things that I really want to see, and they do bring this up, is the debt reduction. They are reducing the debt on board. They're trying to get the company to be more investable, and they're trying to get a specific credit rating for the company. So overall, they grew the dividend by nearly 13% to 17 cents a share. That just happened for this dividend payment. The credit rating, they're trying to increase and get that on track to get it investment grade by no later than 2024. This is going to be really amazing because this will potentially put it on the radar of more hedge funds, more investment firms, and potentially get it into more index funds as well in the future. When that type of thing happens, as you could see with a similar example that recently happened, I can think of is Tesla. Once Tesla got on the S&P, it just kind of ran from there. It was already on a run, and then it just continued to be on a run. I think that there's a chance that if they get the investment grade quality built around the financials for this company, that it will continue to go forward. And I easily think this is a $30 a share company. Now, the free cash flow through midpoint of 2022 is expected to generate somewhere around $2 billion in free cash flow. And now, what I'm going to say is that I would estimate this on the low end because they are doing a significant amount of debt repayment going forward. I would not expect all of that money to go to shareholders. That is kind of the plan right now, though. So they still have from the issuance of preferred shares last year. And I don't know the exact time frame on the preferred shares and how exactly they function. I do know they were at about 7% interest that they're yielding. It's basically allowing the company to reduce debt, but it's also executing a very large share repurchase program. They still have 1.2 billion remaining in that program to rebuy the company's stock over the course of the next year. So that is pretty wild. They can also issue an additional 500 million in preferred shares stock to buy out the other shares as well. Now, I'm assuming with them that this is going to help them get even closer to getting all the debt down and making the financials look even better over time. I definitely think that when you're looking at this company as an investment, I was going into this initially in 2020 with the 10-year horizon because they are in the process of transitioning the company over to being even more of a green energy company, reliant less on coal and moving more to natural gas. things of that nature. So building these massive battery backup systems, and they're doing that for other companies as well, which is one of the things that really interested me, was that they're building these massive battery backups in California and in other locations to bring more stability to the grid overall. And heaven knows that Texas needs more stability in their power grid for sure. So I'm hoping that they'll be able to build out a bunch in Texas as well. Now, this is pretty wild that they generate this amount of free cash flow, and that if they can achieve the investment grade metrics, the company's just going to continue to go up. By the end of the year, I definitely I don't necessarily see it being 27 a share by 2023. I think that that's possible, but I'm expecting it to go up to about $25 a share sometime between the end of this year and through 2023. Um, this estimate has it reaching mid 30s. I'm just not sure. It really depends to me on how the share buybacks go and when they repurchase them, how that's going to equate out on things. Now, they do give a model here for what they're forecasting. I tend to be on the more conservative side of things, so I think that overall there's a chance that we could hit those kinds of numbers with the stock, but I don't think it's going to be quite that fast. I think it's going to take more of a catalyst of them getting the credit rating by 2024, and I think that once that happens, the gap between 2024 and 2025, we could potentially see the stock going up into the, like, from the 27 to the low 30s in 2024-ish. I think that it's going to have a little bit of a slow climb to get back up into those ranges. Now, it did peak last year at the 24 range. I expect we'll probably be getting to that ballpark number sometime in the next 6 months or so, especially if they are doing these large share buybacks and nothing crazy happens with the market. So overall, there's a high chance, very, very high chance, in my opinion, that holding this stock over the next 2 to 4 years is going to give you a pretty high rate of return because of the dividend growth, because of the share buybacks, and the fact that they're working on the debt reduction. One thing to be concerned about, though, is the preferred shares. They did issue quite a bit. I believe a total of 2 point. They have up to 2.5 billion worth of preferred shares out. Right now, they only have about two. So there is that kind of wiggle room gap where they could even pay down more debt or reinvest that capital in other ways. 1 billion of the uh, investments that they made where they offered the preferred shares was to go into the green transition initiative, which is just going to propel the company forward and scale up a lot of the systems that they're putting into play to transition to be even more of a green energy company. So overall, I absolutely think that this was a solid investment, especially if you were able to get your shares last year around this time at like $15 to $16 a share. Obviously, my cost basis is in the 18 range, so it's definitely got a pretty hefty room to grow, and I'm going to be really curious to see them. I like the plan of them doing the share buybacks. I would like to see even more going toward gaining and building that free cash flow up, but reinvesting a little bit more into the business once they've got that investment grade over the next couple years. I'm going to be really curious to see what the next wave of goals are for the company, because they're transitioning leadership. Morgan is stepping down near the end of this year. I believe he's still going to serve on the board, but the current CEO is handing off the company. So that does give me a little bit of concern, but I think that overall we're in good hands. And if the current leadership just continues to do what they're claiming they want to do with the company, that's absolutely amazing. Now, if you've stuck with me through all of this and you've heard this rant about VST, I hope that you're interested in this. You can see the metrics for the company down below. It did cross over. The market cap is now 10 billion. It was 9. So it is going up as the share price continues to go up. The PE ratio is 10.57 according to Seeking Alpha. And the yield is just under 3%. That is with the growth of nearly, 14% for the year. Revenue growth is slowly going up there. Short interest is almost none. So overall, it's absolutely amazing. I cannot wait to see the stock continue to go forward. And if you've stuck with me this long, I just want to say thank you. All of the subscribers that I've gotten, I'm now at 2,200, which is amazing. We're closing in on that 3,000 mark. I'm hopeful that that's going to continue to build. If you are interested in using M1 Finance, there will be a referral link down below. I believe the promotion, even going into April, is still, if you put $100 in, they will give you 50 additional and me 50. That means that you start out with a 50% return on wherever you put that money. And you can drop and buy some extra shares of whatever it is you would like to purchase. I think that it's one of the most favorable systems for a reward sign up for a very low amount to get started in investing. I hope that all of you have an amazing weekend. It's going to be beautiful here. I'm looking forward to spending some time outside with the dogs this weekend, getting some yard work done, and just trying to relax, maybe firing up the grill. Hope that all of you have a great weekend. Stay safe out there in this wild world and keep investing in your future. Hit the goals that you want to achieve. Dividend Doggo signing out.